Okay, guys, so as you know, Pip Chasers episode 2 should be coming out today. By all means, guys, you should find our Pip Chasers episode every single Sunday around 3 o'clock. It's myself and Nathan breaking down our week's events within the trading world and what we're looking forward to in the following and upcoming weeks. This video is a bit different though. This video will be found on our website, rebirth.co.uk, also be found on certain social medias as well. But literally, guys, in this episode, briefly wanted to speak to you about some long-term analysis. So for myself, I'm looking at the USDJPY pair. Over the past couple of weeks, I haven't traded as much on this pair. As you can see, we've got two fair enough indecisive weeks. So for myself, I'm stepping back into the game with the USDJPY. I want to kind of show you from a long-term aspect in regards to how that could help my bias. So as you can see here, guys, literally since, as you can see, like the middle of July, August, leading into August, leading into August, leading into August, and as you can see, September, and then this week, second week of September. But as you can see, up until this week, our price sat nice and tight underneath our weekly key level, just below the 111.308 mark. So 111.30 was a very, very tight level of resistance for this pair, and price tended to wick up, but either closed or most definitely closed beneath this key level for numerous amounts of weeks. As you can see, 1, 2, 3, 4, 5, 6, 7 weeks, the price was unable to break through until this week. As you can see, guys, the wicks tested nicely over the past 7 weeks, but we had a full closure and a full confirmation of a break to the upside. Now, game changer, we've come out of this sideways movement within the moving averages. What does that mean to myself? So this is where I'll be looking at trading executions. So if I could get out a few horizontal rays, show you what I'm talking about. So this was the key level that the price wasn't breaking through. Obviously now we're stepping in to our new range here, as you can see, where price action has tested previously last year. So for myself, it would be a case of, we had a bullish week. Would I be looking at a key test and a retest, I should say, of our weekly resistance, or has the dollar got enough momentum to break through to the upside and continue to certain key levels? So as you can see here, guys, I've got a little purple zone here. All this purple zone is a key level across the top here in regards to where the start of previous weeks may have started to form closures at the end of certain weeks on this pair. So this, in hindsight, as a bullish target, would be a first bullish target for myself. But it's all about why I'm expecting it to get to this certain key level of 113 and not perhaps retest that weekly resistance. So introduce the fact of it tested that weekly resistance on 7 weeks, several numerous occasions. The dollar's bound to get some more momentum in regards to strength. Also, guys, we're in September now. I always like to compare it to last year, for instance. So if we look at September last week, in hindsight, through obviously summertime does tend to have more of a slower market and weaker markets for the dollar. So as you can see, through July, August, going into September, and once again, we was able to break through into this new zone, which leads towards the 113, 114 mark. So as you can see, 1, 2, 3, 4, 5, 6, about 7 weeks again, the price was held underneath that 111 zone, so 111.30 zone, where it had a potential break to the upside. Funny enough, a week before this week, so exactly a year actually, guys, exactly a year, broke above that zone. And as you can see from from previous price action, price to continue to perfect to the T, that wick there around my zone of that 113 onwards. So for myself, looking at a long-term aspect, guys, that's what kind of gives me the confidence, I should say, in regards to reaching this target zone of 113 over the next week or so. I also have my pink weekly trend line that you can see there, guys. I've had, obviously, if you can see, that weekly trend line was tested and respected on a horizontal aspect on the weekly, and that diagonal trend line as I've got going across there. Price couldn't really break through it. So if I just zoom in on that to see what I'm talking about, literally, guys, There we go. So that pink weekly trend line that was implemented across recent years was respected, but we've had a breakthrough of that bullish candle, of that weekly horizontal diagonal trend line, which kind of gives me extra confidence as well. Also, guys, just following another confidence as well, guys. Literally, I've just put in a Fibonacci. Well, I'm about to put in a Fibonacci from the recent swing low on the weekly time frame all the way up to the recent swing high at that 113 that it touched on the 16th of July, weekly closure. We did see that pullback, as you can see, wicks testing the 61 fib, and we can see that having that break out of the Fibonacci retracement zones, out of the 38, heading towards that 0, potentially to our long-term targets of 114,495, which is also a monthly key level for myself. So multiple confluences there, guys. Thought I'd just give you my element and my aspect in regards to my bias for the USDJPY. Guys, look out for pip chasers every single week on a Sunday, breaking down certain technical analysis charts and giving you a bit of insight in regards to how the trading world works and reasons why we love it. Guys, see you soon.